Let me tell you about SBA loans. I've been doing SBA loans for 15 years. So a lot of times people think SBA loans are actually, first of all, given or funded by the SBA. The SBA does not give loans directly. In a very rare case, like the case of the EIDL, was the only time the SBA was giving loans out themselves directly. For the most of the time, what the SBA does is they have banks who are assigned, licensed, or they have the right to do SBA loans. So you have banks and you have lenders that are SBA licensed lenders. So the lenders lend their own money, but the SBA backs it up, means it gives them the insurance in the case the company fails or the business does not succeed or the business defaults on the loan. The SBA will pay back the lender a certain guarantee between 75 to 85%. Now that I've said that, let me tell you 5 types of SBA loans that are available out there. The first one is the SBA 7A. The SBA 7A is a general purpose loan. It can be used for multiple different types of things. It can be used to buy another business. It can be used to buy real estate. It can be used to buy equipment. It can be used for working capital. That's the 7A. Is when you hear someone talk about SBA loans, most of the time they're talking about the 7A. The 7A general purpose loan goes all the way to $5 million, right? You can get up to $5 million one time, meaning you cannot have 2 SBA loans that exceed $5 million. You can have multiple SBA loans, but as soon as you reach $5 million as one individual, that's where the limits of the SBA is. So that's the 7A. Let's go to number 2, the SBA 504. The SBA 504 loan is a long-term loan. It goes up to 25 years. It includes 2 different loans in one. So you have the first loan, which is done by a bank. For 50% of the loan is used to buy commercial real estate or equipment, very, very large and expensive equipment. So if a company wants to buy a commercial real estate building, the SBA will give them a loan of 90%. I'm a company and I want to buy a building that costs $1 million. The SBA would allow me to get such a loan with only $100,000 down, meaning includes my fees. So if everything came up to $1.1 million, $1.1 million, let's say, I'm only going to bring in $110,000 as my down payment. That's to buy commercial real estate, but not for investment. Is to buy commercial real estate for my business to be conducted in that building. Here's a great part. The loan allows me to lease out 49% of the building to other people, so that those people actually essentially can help me pay for the mortgage on that building. So I can have tenants as long as I occupy or you occupy 51% of the building, you're good. So let's talk about loan number 3. SBA loan, the micro loan, is a loan that goes anywhere between $5,000 to $50,000. So those community banks are allowed to do those micro loans. They do them for small business owners. If you want to get started, you can get a loan for $5,000, $25,000, or $50,000. Those are micro loans. They're pretty easy to get. If you're organized enough, you'll be able to qualify for that. Okay? And the micro loan do fall under the 7A. So another type of SBA loan, the SBA Express loan. The SBA Express loans go anywhere between actually about $50,000 to $350,000, and varying degrees of it. Some SBA Express loans are used for startups, and those loans go up to $150,000. But once you've been in business for 2 years, you can then qualify for the SBA Express that goes up to $350,000, but you have to show that you have 2 years of tax returns filed and you were profitable in your last years of tax file. If this is the case for you, then you will become, you could qualify for that loan. So again, this is a loan that startups can qualify for, the Express loan. But when you are a startup, you are only allowed up to $150,000 without having to provide any collateral. In other words, the SBA is not going to ask that you put your house up, okay? Now, on most SBA loans, like the 7A, if your loan exceeds $350,000, they will ask you to put up collateral. Whatever they can put their hands on, they're going to ask for you to put it up so that they can be able to guarantee the loan. Another SBA loan is the SBA Import-Export line of credit. Okay, so an import-export line of credit is simply what that means. If your company exports or exports something from the United States of America to other countries, you can be given a line of credit up to $500,000 that will cover you buying the stuff here, sending it overseas to be sold, and then being paid from that. So that's from the SBA Import-Export line of credit. You can also get a SBA, this will be number 5, the SBA Import-Export loan. That can go up to $5 million with you just putting in 10%. Then you get an import-export loan, or you can get a loan that allows you to build a manufacturing plant in another country. So if you are an American company and you want to build a manufacturing plant in another country, you will use that SBA Import-Export loan that will allow you to build that facility there, as long as you can bring in a partner from the country that you're going to that will bring in at least 20%. They will give you the difference. So if you're looking for a loan of $5 million, if you're looking for $5 million, you have a partner that brings in $1 million, the SBA will give you up to $4 million for you to build a manufacturing plant in another country, as long as that country, of course, is friendly to the United States. So those were the 5 types of SBA loans and lines of credit. Most of them you may have heard of, you may not have heard of. Now let me add one bonus. There's the SBA community loan that goes up to $250,000. This type of loan is only provided by community banks. Does not require collateral. You can get it with fairly good credit, and they're a little more lenient on the approval because the community is incentivized by the government to lend to the community in which they do business in to help improve the economic situation of those communities. Until next time, I'm Marcus Mavacala. Talk to you later.